All right. Hey, everyone. Mark here. Mark P Markets. Hey, thanks for joining me for another Bitcoin day trade session and U.S. market open price action analysis. All right, I know I'm running a little bit behind here. Just, these technical things are not easy for me. Anyway, all right, so let's not waste a lot of time. Let's get started. Let's get right into this. So first thing I want to say is this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Okay, and so again, real quick, if you're new to the stream, basically what I'm going to do is I'm going to spend, we're going to evaluate Bitcoin on two time frames, right? Well, first, we're going to look at the smaller time frame to see if there are any day trade setups that are worth exploring, okay? And while at the same time, we're going to be looking at bigger picture things, other markets, major markets on the bigger picture to see what has changed since I've been streaming and see if there's anything, and what that means as far as shaping our expectations for the future, okay? Again, people think that charting is all about forecasting and saying, oh, I know where it's going to go. Well, that's all wrong, all right? Charting really helps us gauge reasonable, what I like to call reasonable expectations and give us a sense of risk. Okay, not, oh, Bitcoin's going to go here in 3 months. That's complete nonsense, and that's novice stuff. All right, anyway, so let's first things first. Let me just mention a couple of things. I hope you all had a nice holiday. First of all, I mean, I don't even, holidays. I usually just work through them, so I don't even recognize them most of the time. Hey, Steen, good to see you. Honda Man, all right. Armin, Eligius, Bill, good to see you. Ben, okay. Han, good to see you. Jeff, hey, Jeff. All right, Alex, get all my regulars here. All right, so real quick, if you're not familiar with my training program, you should check it out at markpmarkets.com. Okay, you can go there. All the analysis and all the techniques that I'm going to use here are the foundation of that comes from that program that I put together. Okay, so check that out. Also, if you're not in my Discord channel, make sure you go there. There's a free area. All right, there's a link in the description portion of this video. Check that out. I am running a Cyber Monday special. I haven't sent that out yet, but if you're interested, I'm going to run that special the whole week. It's not going to be the same as the early bird coupon that I sent out to everyone else, the people that asked me for it, but I am running a Cyber Monday special. If you're interested, go into the server and reach out to me. Send me a private message in the server, okay? But I am planning to send out an email with that as well, okay? That's the Cyber Monday, because today is Cyber Monday. All right, anyway, so I have a sale. I do have a sale for that, and I do have bundles and packages for my Signal service in the server, and I do bundle it with my training program if you're interested in both. All right, so enough of that. Let's talk about charts now. Okay, so I wrote a TradingView article the other day, and I talked about in that article there was nothing going on, okay, at that time, and basically, we're in holiday mode. And that's what this price action was back here. Holiday mode, you have to understand, if you don't have experience, you're not going to understand holiday mode. I've been in this game for more than 20 years. Okay, unlike most of the clowns in this business, I have been in this game a long time. And I've seen this holiday over and over and over. And volume goes away. And then there's all this erratic behavior, the euro in particular. We're going to talk about that when I get to it. Anyway, so with that being said, you have to understand that in this type of environment, you can't have any expectations really. If the market gives you anything, it's really a gift, because this price action, most of it is nonsense and meaningless. And you have to keep that in mind. There's nothing going on right now that's, oh, this means something on the bigger picture. No, there's nothing going on. Okay. That's very important, because that should affect your expectations and your behavior and how you make decisions. It should shape all of that. And basically, it should make it so that, okay, there's really not a whole lot going on here. I should probably be more conservative. I should probably not trade at all. That's usually a good idea in this type of environment, okay? Don't force trades. Now, so let's first talk about Bitcoin on the 30-minute chart, all right? Again, now we're going to talk about this from the day trade perspective. I don't like showing this because it's not appropriate for beginners. All right. A lot of the stuff here, you may visually understand what I'm showing you, but you don't understand the context. And if you try to apply this on your own, you're most likely to lose. Okay. So I just need to let you know that what I'm showing looks simple, but there is some substance to it. And I mean, that's part of that is, having a strong grasp, which is what I try to deliver in my training program. Now, so first things first, we're looking for basically two things, right? To start out. Now, I start out with a 30-minute chart because I'm trying to get a sense of the bigger picture for an intraday trade. This chart doesn't really mean anything other than that I'm trying to form my expectations or my game plan for an intraday trade. Intraday means I'm going to get in at some point and get out the same day. It may be 5 minutes, it may be an hour, it may be whatever, but this is not a swing trade. I am not going to hold this for any period of time, any longer period of time, because I'm not interested in that magnitude of risk as a day trader. Okay, this is all about risk. That's how you categorize the trades. Anyway, so 30-minute, I'm looking for price structure and I'm looking for levels. This is a consolidation. Okay, this doesn't really mean anything, right? On this time frame, it broke the support of the consolidation pretty dramatically, right? Okay, we see that. And it found its way into this old resistance. Okay, is there any surprise that there's some stability here? We shouldn't be surprised. It's a level. Okay, so right now what we know is we have a consolidation break. We have this momentum that is basically in play. That's obviously the overnight, okay, momentum or whatever that is there, or maybe is that Friday? Maybe that's going into Friday there. So we have that momentum, and then we have this structure here, which is some sort of consolidation inside of this support area. All right, and we are now looking for other levels to coincide with this. Right here, it's an old support, which is now the resistance we're looking at as a day trader. Okay, that's our day trade resistance. So I have that identified. What level is that? That's around 16,300. Okay, that 16,300 area. That number keeps coming up, by the way. I've actually had a swing trade idea that I shared on TradingView based on that number. It was not an official swing trade. It was just basically just like a general idea, but that was a level. All right, so clearly price cleaned through the level, and now that level is acting as a resistance. That shouldn't surprise us too much. Okay, so that means that intraday, if we can test up into that area, we should be considering short setups, or we should be looking to exit along if we're long. Again, as a day trader, you have to look at this from both sides at all times. You have to consider the market from both sides, okay? Especially as a day trader, because things change very fast, right? So that's one level. Another level, a more minor level, is going to be this resistance right here, which is what? 16,242. All right, so the 16,250 area, which basically we've rejected, okay? I mean, look at this pin bar. That's a 30-minute pin bar. Now, as far as supports go, all right, we are in a generally supportive area. This is generally supportive, okay? Which means a short squeeze can develop, a larger time frame short squeeze can develop here. It's not doing a very good job right now, but it can. So keep that in mind, which means if we take a short in this area, we shouldn't be very expectant of it, okay? It's going to be higher risk. Here's our first support right here, which is 16 even. All right, nice whole number, basically. All right, and then we have like another support in this area right here. These are minor supports, 16,143. So those are our levels, okay? So basically 16 even, 6,143, 16,143, or basically you can round that to 150. Then you have basically 16,225. If you want to round that to 16,250, that's fine. And then you have this area up here, which is 16,300. Those are your day trade levels, okay? I mean, going back a little further here, I mean, look at this. We can look at this right here, right? Look at this touch from back here and look at this touch. Is that a coincidence? That's not a coincidence. There is something behind that. And what's behind that is basically what I like to call market memory. There are traders that are caught. Okay. Obviously, they're caught on the short side. So when it retests the area, it gives them a chance to cover their short, which means they become buyers, right? And it adds to the buying activity in here while you have other traders looking for longs to begin with on a pullback, right? There's all kinds of reasons. We can't narrow this to just, okay, one reason, but that's the general idea and that's the behavior. I mean, look at that. So how could that information, how could that have helped you? Well, knowing that this was a potential area, going into that, for one, you should have known this is a bad place to go short, and it's a good place to cover shorts if you happen to be short. And and this is a bad place to chase it, especially if you get mesmerized by something like this. And you say, oh, that's a short. I'm going to short it right here, and you short the bottom. Okay, that area should have warned you. Not a good place to short. How about long? Well, possible long, but it's aggressive because you are fighting against this momentum. So after the fact, we can see that basically if you got long in this area, again, this is based on a 30-minute chart, it was worth something. There was some positive pips in there, some positive points, but not much. Okay, so keep that in mind. People think that they're going to get this price right here. They're going to, well, I'm going to be better than everyone else. I'm just going to buy it right there. Well, you don't know if that price is going to hold. It's a reference point. Because, after the fact, oh, yeah, I would have just put my limit order right here. A novice would come to you and say, well, I would have put my limit order right there. And then, look, I'd be up 1,000 pips or 1,000 points like in 2 seconds. Well, I'm amazing. Buy my stuff, right? That's what a novice would say. But the reality is you don't know if this is going to hold or not. It's a reference point, okay? That's what these levels are. They're reference points. They look good after the fact. But just as an example, this was also a reference point. That was a support. It got blown right through like it wasn't even there. Okay, so if you put the limit order there, I'm going to buy it there because I'm a genius. And then it blows through. So keep that in mind. Okay, you can't play that I'm going to put the orders in advance type of game. You can't play it like that. All right, anyway, so let's move along here. So we have our ideas, right? So now as far as a trade, I'm thinking, all right, well, I mean, just based on these levels, this is a possible area for a short, okay, as a day trade, and my possible longs are here or lower, right? So right now at this moment, even though this structure is bullish, right? That's basically we have a higher low situation right there. You can't ignore that this entire thing is basically a lower high relative to the bigger structure, right? And that's what carries more weight. So I'm going to think on the short side right now. I could be wrong, but notice I'm not taking a trade. I'm thinking on the short side. So I'm preparing. All right. So now let's go to the 5-minute chart. And we have all our levels on the chart. Nice rejection there. Look at that inside bar. So now again, you may argue, but this is a long. Look, that's long. That's bullish. Well, yeah, but we just saw that the bigger picture is not very supportive of that. So I suspect that if this is going to be a long, I mean, this may turn into an aggressive long, and maybe it tests this area. As a day trader, that's a valid idea. Okay, so that's one consideration, but it's super aggressive. All right, notice I say that it's super aggressive. Now the short side would be considerable up in this area, right? So if I'm going to get short, I'm looking for price to test this area. So for purposes of this session, if I can show a trade example, let's just take a little measurement here. What would have this if this is a long signal back here, right? What was that worth? Let's see, 174. The high went to 284. So that's 100 points. Okay, so this is worth that movement right there was 100 points, and the risk certainly was not 100 points. So we'll just say the risk was about 50 points, something like that. Okay, if you had taken that aggressive trade, that would have been ultra aggressive again because you're fighting this. But all right, let's just say. So if that's the case, right, and that means expecting about 100-point move is reasonable. All right. So we're going to watch this candle here, and we're going to see how this closes. This candle has 2 minutes before it closes. We'll see that may turn into a buy signal. If it does, it's an ultra aggressive long if it turns into a buy signal. I'll be open to it. We're going to give it a try. Now, keep in mind, I'm doing this on paper. Okay, I don't even have the things, the platform set up yet. I haven't even had time to set that thing up yet, but I want to show the actual trade, in the platform. I will be doing that this week. Okay, I know I keep saying that, but I've had so many other things get in the way. So, but I want to show the actual trade with the numbers and all that stuff, because that I think will be very enlightening and eye-opening. But anyway, for now, again, I would suggest working with this on paper. This can turn into a loss. All right. So just understand that. I don't want people coming to my stream and then losing money. But we're playing a highly random game. Oh, if you're so good, you should be able to make money. We're playing a highly random game. There's no skill here. All right. Or the skill is not what you think it is. I get into that conversation all the time. Game of skill and game of chance. This is mostly a game of chance. All right. Make sure you grasp that idea. Everywhere you look in this game, and we all start out the wrong way. Everywhere you look for as far as educational help, everywhere you look implies a game of skill. And people think that the skill is in charting, and it's all wrong. All of that is completely wrong. And that's why everyone begins, as a failure. Or you make up a couple of good trades here and there, but generally you don't get anywhere and you get fleeced. There's a reason why all of that takes place in the way it takes place. It favors the industry. Okay. Are they purposely trying to mislead you? No, they want you to trade. Okay. All right. We have a close here. They want you to trade so that you generate fees. They don't care about the outcome. So of course they want to imply that this is a game of skill and that you're going to make money. But I have a lot of arguments. I can make a very strong argument that this is not a game of skill. Okay. Which is a very, very important aspect of this, because you could basically flip a coin. That's why people ask me all the time, how come you don't have any oscillators on your chart? Because they're a waste of time. They don't provide any advantage. You can flip a coin and get the same result. All right. So, and I saw an interesting argument on YouTube about oscillators, basically supporting them, saying, well, I know people that make all kinds of money with them. That's nonsense, number one, and it's coincidence. All right. I'm not going to get into that rant right now. But let's talk about this trade idea. So 274. So we'll say 280 is the entry, right? The high of that candle there is 224. Wait, I'm sorry, I get the wrong numbers. What is this high here? 224. So we'll say 230. I'm going to put this line over here at 230. Okay, so 230. In fact, you know what? Before I do that, this is Bitstamp. Let's go to another. Let's go to the perp. I forgot to put the perp chart. Man, today is Monday. So let's go to perp. Okay, and who comes up here? Binance. We'll use the Binance perp chart. It doesn't matter who you use. You should use whoever you're placing the orders through. Okay, so if it's Binance, if it's BitGet, if it's whoever. Okay, whoever has the futures. Now let's go and look at the price over here. This is the 5-minute chart again. Nothing has changed. So this would be the area where the stop goes. Now, again, the order is not active. I'm just mapping out the orders in advance. Okay, so we have what, 16,187. We're going to basically round that to 16,180. That's basically where the stop should go. The long, right, the buy order should go here at 16. So we're going to put that at 230. We're going to give it a little more room. Let's just move that number. Let's move this line up to 230. Okay. Right there. So if the market produces a green candle over the next 10 minutes and we get something like that, that's the buy signal. All right. Now, obviously, we don't have that right now. So something like this, putting your orders in advance rather than reacting to it, saves a lot of money. That's one of the first beginner things that you can do is place orders in advance. Don't react. So as you can see here, I'm interested in the long. The market doesn't want to take that trade right now. Okay, no problem. The market knows everything. I don't know anything. And what if it goes to the stop? Right? It never even got us into the trade. What if it goes to the stop? Should I get short? I am not crazy about shorting in this area. I don't like this area as a short. We talked about where I'd like to get short. Again, I'm not reacting. The short needs to happen up here, something like that for me, or at least a test of a higher level. Not into support. So look, now we're basically going to that area where I put the stop. Okay. Again, that's a theoretical stop because I'm not in the trade. I want to make that clear. Some people may not understand. I speak fast, I know, or there may be some vague things here. I want you to understand. So now it took out that level there. Okay, I never had a trade. All right, you see what I mean? So right there, I saved myself, for one, getting stopped out. Look at this thing getting hammered now. So, okay, no problem. Should I have shorted that? I don't like the level. In fact, we're going now into a more pronounced support level. Okay, look at this. So we have all this support. We're going right into it. Do I want to chase that? No. If this is an area to consider longs, especially this area right here. Okay, so I'm going to watch that now, and we'll see how the next couple of candles unfold. Does that make sense, you guys? Let me see what kind of questions I have over here in the chat. Okay, hey, Shell, good to see you. Hey, all right, cool. Yeah, Joel, thank you, Joel. I appreciate that. Yes, you're all set. Okay, I see 10K forecasts. You know what happens, right? Well, here's the thing, Alex, because I agree with you. When everyone thinks the same thing, they're usually wrong. That's the way it works. So if you have like the complete morons of morons coming out, and they're all forecasting 10K and 5K, there's a good chance that we're never going to see those numbers, right? But here's the thing. I put those numbers, maybe they're copying me. I put those numbers in my TradingView article. I said 14K, 10K, possibly 5K, right? But that's not a forecast. That's just risk that you should account for. That's all that is, meaning it's too early to really start piling in. There's no sign of a bottom. There's nothing, right? So those numbers are not unreasonable. That's all I'm saying. But I don't forecast it. We're definitely going to 10K. You'll see. I don't know. We might, but we might not. Okay. The thing is, you don't want to put all this money to work now only to watch this thing go from 16 to 8K. It can get cut in half again. It's still possible. The environment hasn't changed. Okay. I need to see some other changes before I believe Bitcoin is going to do anything spectacular. And here's the other thing. We are on the front, we are just the very beginning of a new regulatory regime. I feel that's a good word to call it. See what I mean about chasing that short? You see what I mean? Do you see what I mean? Don't react. Okay. Anyway, there's a lot of regulations on the horizon, and the altcoins, I believe, are most vulnerable to this because they're going to be probably most affected. Bitcoin is not a security. That's pretty clear. So the regulation may not affect it as bad, but the thing is, we don't know. We can't sit here and say, well, I know how regulations work. We don't know. It could be a great benefit for Bitcoin. It may not be. Okay, we have to see. But there's going to be what someone had described as a fundamental change. That's important information because that means the relationship between Bitcoin and the altcoins is likely to change. And that's going to be interesting, right? So that's why you have to keep a very open mind, and you can't make any type of, whoa, Bitcoin will be here in 6 months. We don't know. And the regulation is all going to be coming next year. All right. So that's why you can't go by anything that anyone's saying right now. We have to see how the regulation starts to unfold. We also have to see how the Federal Reserve, what kind of changes they make. Okay. Because again, the Federal Reserve does not like Bitcoin, and it does not like these altcoins because it basically threatens their power, right? And no one likes their power threatened, especially when you have the world reserve currency. You like to be in control, right? So I like to believe in conspiracy theories sometimes. I like to believe that they have a hand in this situation that's basically taking this market apart, Bitcoin and the altcoins. So with all that regulatory stuff on the horizon, I am not excited about any of these things, all right? Because usually in the beginning, it's not a good thing. All right. Regulation is generally not a good thing. Deregulation is a good thing, in terms of market action, okay, and bringing more money into the market. But regulation means it's going to be much more costly to run these, especially these altcoins. They're going to have to hire compliance people, which means you have to pay lawyers, you have to hire accountants. I mean, it may not even be worthwhile for a lot of these people to even continue. Okay, with the kind of cost you have to pay to register, it's not cheap to register. Like if you have a stock and you want to bring your stock to the market and you want to be able to sell a security, it's a very slow and tedious and expensive process. Okay, that's why they come up with these special acquisition companies that these things, because it actually it expedites the process. It moves the process faster to get a stock to the market. Otherwise, it takes a long time, right? And it's expensive. So that's going to put a lot of these altcoins out of business. But they're not a business. Yes, they are. All right, they're just a new version of a business. That's complete nonsense. And I warned you about these things for the longest time. I told you most of them are garbage. In fact, there was a joke, we used to call them garbage coins, because they were just basically a way for software people to rip you off and to rob you, and it worked very well. All right, and I understand a lot of venture capitalist firms were able to benefit from that dramatically benefit from that. So that was not a place for retail traders to get rich. It was for rich people to get rich, or software developers to get rich. Okay. Anyway, all right. So we're watching this candle. I haven't gotten even to the bigger picture yet because I'm watching this candle, but we're going to get there here in a moment. I go off on these tangents. So we're watching this candle right there. We'll see how that closes. We have 1 minute, all right, before that one closes. But it's a good thing I was not shorting that, right? Because now we'd be stuck in it. I even warned you about the level, and we got the tail right on that level. All right, so while we're waiting for Bitcoin to do something meaningful, in fact, I should wait till this thing closes, right? Let this candle close so we could draw our new levels. Okay, so let's get rid of this, right? This is no longer relevant over here. Okay, there's the candle close. That's a bearish pin bar, okay? This is a bearish pin bar. Now, this may generate a sell signal. It's also an inside bar relative to this previous candle. It may generate another sell signal, but again, people say, oh, the signal, I have to react. No, you don't react. The location is still bad for shorts, okay? I don't want to short into a support. So nothing for me to do. I'm not shorting that. Here's the new long signal right here, okay? 16,200. So we touched 16,200. Let's say 16,205, okay? Let's move it up a little bit. 16,205. Let's let the market work, right? Let the market work to tap you in. Let the market make the choice, not you. All right, so there it is, 16,205. Market needs to go up there to get the trade long, to get the day trade going long, right? And we'll be looking for 100 points, and we'll have a 50-point stop. I know all my levels and my prices and my target before I'm even in the trade. I just laid them out, okay? No trade, and I still know all my levels. That's not reacting. That's anticipating, and that's letting the market do the work, okay? So once the trade is active, then it's up to the market from there. And perhaps we make some adjustments based on new information, but we have to see what the market gives us. So right now, that's the idea. All right, so I'm still looking for this aggressive long. I'm not going to short. Like, I'm open to shorts. I would love to short this thing, but not at this location. It's too risky, okay? If I'm going to short it, I want to short near resistance levels, not supports. If I'm going to short the support, I need to see the break first, and I need to see the retest of support. I don't like breakouts. They're too Captain Obvious for me, and I see people get faked out. There's just too many fake outs. I don't like that. So I prefer the higher probability, in my opinion, and that is that's the retest. All right, so let's see what's going on. I have to look at the bigger picture here, but look, this trade is about to activate. We'll watch that. So now let's move along while we're watching that, and let's take a look at our bigger picture. So starting with Bitcoin, again, I wrote about this situation. There's a new sell signal on the bigger picture here, right? That's a new sell signal. The problem is this is just overlap. So yes, it's a sell signal. It's very aggressive shorting this, because even on the bigger picture, look where you are. There is very high short squeeze potential in this area, right? And that's why I am not comfortable shorting. I don't short Bitcoin on this time frame. I don't do that. But people want the call, I make the call, okay? And I give them the levels. Now, we're still fooling around this midpoint area. This is highly random. If I'm going to call a short, I want to see this thing up here. All right, that's where the higher probability is. Now, can this thing generate a sell signal and break out and go lower? Yes, it can happen. It's going to need a catalyst. Perhaps NFP, which comes out this Friday, I believe. Perhaps that can act as a catalyst to get this thing going. I don't know. But that's a potential catalyst. Otherwise, it's very risky here. This thing can very easily fake everyone out and do something like this. I prefer to wait for something like that. I want to see a better level, right? Good trades begin with a level, not with just a reaction. See what I mean about this? Look over here. Nothing going on there. Okay, so no trade yet. So that's Bitcoin on the bigger picture. If this thing breaks, I mean, these are your next support levels, right? And this area right here is basically a high probability target, okay, which is that 14K area. I don't know if we're going to get there, but that's a reference point, and that's for swing trades. Okay, let's move along here and let's take a look at the bond market. These markets you should always check. Okay, you should check the bond market every day. All right, and let's zoom out a bit here and see what's going on. Okay, let me see. I see a question here from Sharaz. Thank you for your time. I am looking to invest in 5 years. I am not a day trader, so I think your order at 15K is reasonable. Okay, do you think an order? Okay, let me talk about that. Okay, and Armin answered the question there. So in a situation like that, Shiraz, you're thinking bigger picture. Nothing wrong with that. But you have to, like Arman is referring to here, you have to have a target allocation. See, when people think of investing, they think of just, I'm going to put here's my amount. I'm going to put my $10,000 in at 15K. It's a good price and I'm invested. Bad idea. That's a lot of risk. What if it goes to 5K, right? What if it goes to 7.5K? You watch your money just get cut in half. Bad idea. The more effective way is to spread it out over time. So you have your target allocation, an amount of money that you're looking to invest. You know this in advance, and you say, okay, I have $10,000 or whatever number that is, and I'm going to invest it in Bitcoin. Okay, great. But you're not going to invest all that money at one price. You're going to spread it out over time. That's called dollar cost averaging. Okay, you don't really need charts for that. What you can do is, 15K, it's a decent number. Put an order in. Now, let's just say $10,000 is your target allocation, and you want to invest $100 at a time. All right, that's what, 1% at a time. So maybe you do 2 orders per month. It's going to take you 6 months or 5 months to be fully allocated, and you're gonna accumulate an average price over time. So perhaps you put some orders at, you can put the orders in advance, limit orders. Perhaps you put one at 15,500, right? $100. Okay. Another order at 15,000 even, another $100. Another order at 14,500, another $100. So if there's any erratic movement and there's some kind of exaggerated move to like 14K, you're going to get filled on all those orders at great, and you're going to get better and better prices. But you can do it that way. Place the orders in advance, or you do it on a time schedule. So like, again, the 1st of the month, the 15th of the month, no matter what the price, you buy $100 worth. You can do a combination of both of those strategies or techniques. But again, the idea is to spread out your orders over time to accumulate an average price. If your average, so if Bitcoin goes to 5K, you're going to be putting your money to work at better and better prices. Okay. And if it finds stability eventually, and over a 5-year period, Bitcoin may test 5K and then return from there. But it's not going to be simple and like a one-day event. Okay, it's at 5K, that's the bottom, and now it's going to go to 50K. It doesn't work like that. So if you're new and you just want to be an investor, what I suggest is follow me for a little while. You don't have to spend any money, but follow my concepts, because I'm looking for longer term opportunities as well. I'm a day trader, I'm a swing trader, but I'm also have my eye on the bigger picture also. Okay, I am looking to put together a portfolio of perhaps some altcoins. I'm not very optimistic about altcoins, especially the ones that are in existence now, but I'm still open to the idea of a highly speculative asset. So it's okay. And also, I'm not looking to invest a lot of money into them. Okay, so, but I am looking for some instruments, right? Like some altcoins, perhaps some cheap stocks that have growth potential, over a longer period. But again, those are not, you don't put 50% of your allocation into something like that. You don't do that. That's very, what's the word I'm looking for? Look at that break. It's very irresponsible. Okay, so here we are, right? Let's see how this behaves here. I'm interested in a long still, long, things are short. This thing's in a support. Look at the tail developing. So let's watch how that develops. Okay, now, So let's now on that note, that was my rant there to Shiraz. I hope you found that helpful. Let's take a look here at the bond market. Okay, and let's zoom out here a bit because you should be watching the bond market at all times. This is a very important sign of what's to come. And right here we have a resistance. The resistance is still intact. I don't care about this price action over here. Oh, it's a bull market. It's a bull market. That's not a bull market. That's just an irrational movement back toward resistance. We have a possible double top developing. So basically, all of this equates to nothing has changed. That's what that equates to. The bond market is still generally not supportive. The bond market is still likely to pull back and test lower prices. Okay, it's still likely to do this, especially in the light of the fact that the Fed has not officially come out and said anything dovish. Okay, I don't care what the meeting minutes, the market is just very enthusiastic and will take any little positive thing and make a big deal out of it. So that meeting minutes on Wednesday was just complete nonsense. All right, and the market rallied for it's just irrational optimism nonsense. This hasn't changed, right? So I listen to price. I don't listen to people. This thing pulls back. Rates are going to continue higher. That's not good for anything. Okay, so we'll see. Maybe the bond market will prove me wrong, and the bond market will break higher, and then we have to make some adjustments. Okay, no problem. I have an open mind. All right, but right now the bond market is not showing anything of significance there. Let's take a look at the stock market real quick in the form of the Nasdaq. Look at this. Right, this Nasdaq sucks. All right, that's putting it nicely. It sucks. Look at this. Look at this. Look at this resistance right here. Okay, look at that. We've got a double top developing there. If anyone was dumb enough to buy into this, you can only blame yourself for being reactive and being just part of the herd and being mindless and consuming garbage that is fed to you. All right, and on that note, I want to say something while we're waiting for Bitcoin to do something here. That FTX situation, I have to bring that up again. I mean, there's all kinds of information about it on YouTube. I mean, constant videos everywhere. But I have to say something about, there are a lot of big money people that are respected financial gurus. I'm not going to mention any names, but these are supposed to be, this one person in particular, these are supposed to be very shrewd and very clever and very well-informed business people, right? And they got caught and they lost, I don't know how much money. If guys like that, for one, it exposes them as a phony, number one, because they're steering people into these things. Oh yeah, FTX, buy it, because they're a good deal, blah blah blah. How many retail people like yourself, people like me, got caught in that because their favorite guru, I trust this guy, he knows his stuff. No one knows anything. If guys like that, okay, savvy business people who know their stuff and they're rich, these aren't poor people, these are rich people, okay, they should have access to better information than us, and they got caught. What makes you think you have a chance? Okay, please keep that in mind. Also, it exposes a lot of phonies, not only phonies, but the conflict of interest. And that's the key point. Conflict of interest. FTX paid a lot of these people to promote them, people that are trusted. Okay, and FTX paid them a lot of money. These people, I mean, the question is how, they've risked their reputation, but will people forget? Well, everyone's allowed to make a mistake. It wasn't a mistake. I mean, when you're getting paid a ton of money to promote the company, I mean, so you have to be careful on what you believe. That's why I don't listen to people. Listen to price, okay? Listen to price. Price doesn't lie. So here we go, right? NASDAQ sucks. If you bought into that, only you can take responsibility for being a mindless sheep. That is what you are. We all start out that way, and you're getting fleeced. That's it. Okay. If you don't like that, then you need to unplug yourself from the mainstream news. That means any mainstream source. I saw a story about Bloomberg. Okay. Bloomberg, the mainstream, the news organization, and they were offered this information about FTX way before it came out, and they said no, because it was a conflict of advertising interest or blah, blah, blah. There was something about that. I saw that in a video. That is ridiculous. So that says a lot about the journalistic integrity that we all must deal with these days. Stop trusting these people, okay? Learn to trust yourself, because only you are going to be the best caregiver for your money. Only you, no one else, especially people that are, oh, well, I'm so-and-so from this company and I'm a respected analyst, blah, blah nonsense. Okay, anyway, that's my, it's a really long rant, right? I got to stop with those. Anyway, all right, so let's get into this here. So that just brings up this, if you're long here, you're just, I don't know what to tell you. Okay, this is not a long. In fact, there's a sell signal on this NASDAQ, and you should be, if anything, short with options or something like that. That's the way I would play that. But, you know, and looking for a test of perhaps the midpoint, something like that, right? That's a very reasonable area to test. And even if the market tests that area over the next week or so, what would that prove about the market? Nothing. It's just overlap. Okay, it's not a lower low. We have no change of trend. It's just a consolidation. That's what we're facing. That's a lousy market. All right. But the short side, a very careful short side, would be what I'd be open to there. No longs. I've been staying away from stocks for a long time. Okay. Anyway, let's take a look at Bitcoin. What's going on here? We have a candle close inside bar. All right. So let's now just draw some levels here, because we have another setup developing in this location, which is still a support. It's a failed low support. So, and there's some evidence of buying activity there. Okay, so let's draw some lines. All right. Right. So I'm switching mentalities here. We're going from bigger picture back to the day trade mentality. I hope you can follow me. If you're new, you're going to have a hard time with this. This is going to be very confusing. But you have to get to the point where you can think on all these magnitudes at the same time. So we're going to put this at 165. Okay. So the long right now is at potentially 165. The stop is going to have to go all the way over here at, what is that? What is this price here? 621. I'm getting these numbers wrong. So the high is, what is this here? I'm sorry, I'm looking at the wrong prices. So we got 16,108 is the low, right? So stop would have to go basically 16,100, and the high 163. It looks like 163, right? So that's, we'll just put that, that'll be the price, 163 or 160. You could round that to 160. We're nowhere near that right now, but if price goes up there and takes it out, that becomes your day trade long, right? Your stop is going to basically be 60 points. You need to make at least 60 points in that trade, right? So your target is going to be 60 points or greater if you can get it. All right, so that's the idea. That's the game plan. We'll see if it plays out. So far, both long setups that I've been monitoring here have not even been activated by the market. So I'm not acting here. The market chooses to get me in or out. Does that make sense? All right. So let me just see whatever other questions I have here. BlockFi filed for bankruptcy. Oh, thanks. Thanks for letting me know. Okay. Well, they're all caught. All these companies that are caught, you know, if they have exposure to FTX and blah, 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 you're going to see a lot of this. That's why people should, there's no reason to be optimistic about this space, especially going into a regulatory environment over the next 6 months. That's what we're looking at. Okay. So no reason to be optimistic. If there's any type of irrational rally, don't get sucked in. All right. That's all I can tell you, because it's nothing but nonsense. It's nothing but hot air. We have to see how the regulations play out, and there's no way to know. Anyone that pretends to tell you otherwise, you're going to see all this stuff this month, right? In December, you're going to see, whoa, 2023 is going to be the year of the altcoin. Here are the next 5 altcoins that are going to 10x over the next. Just watch for that nonsense. It's complete nonsense. Okay. Anyway. Okay. So shall we buy the SQQQ? All right. Let me see. I'll talk about that here in a second. Stian, that's a nice quote. Stian always comes up with the good quotes. Are you sure, Alex? Yeah, you know what? I probably do need glasses, right? No, but you know what? I was looking at this chart and not this chart. That's why my numbers were off. But yeah, I am having a hard time seeing some of these things. Um, are you making fun of me? Anyway, all right, look, no, I can see what's going on here. I just have to make this a little bit bigger. Look, so 160, I'm sorry, is that the right price? Let me make sure. Yeah, the high is 157. So 160 is going to be the price. All right, again, I suggest paper. Do not do this with real money. All right, and I'm going to get the trade platform up so that you can, not today, but I'm going to have it up so that I can actually take the price. You'll see how I place the orders, and then we'll see how the market does its thing. Okay. So still not active yet, but that's the price. So we'll watch that. Now, I have a few more minutes. While we're watching that, let's move along here. That's the NASDAQ chart. Let's go back to our bigger picture analysis here. And now let's move over to the dollar. Okay. Someone was talking about the dollar before, right? Double bottom. And you knew what I was going to say. Let's see if you're correct. Well, yeah, you are. Double bottom on the dollar. This dollar situation has been nothing but ridiculous. Okay, I was in that euro trade. I want to talk about that euro now. I'm not going to spend a lot of time on this dollar because I got stopped out of the euro. I have to talk about that. So, double bottom developing. So people say, but that's a lower high. That's a bearish thing. No, this market's still bullish. Okay. I mean, look at this bigger picture. Does this look bearish to you? This is just noise. This is nothing. This is nonsense. We haven't even taken out any significant supports. This right now is a significant support. What is that? 105 area. We're still above that. So I'm anticipating a reversal in the dollar, and that's on the side of the bigger picture trend. So it's within reason. Do we make new highs on the dollar? I don't know. But a test of high, or at least a test of this area, is reasonable over the next month. That's reasonable. So with that being said, let's jump over to the euro, right? Because this trade sucked. And I want to talk about this because I called this trade like a week ago going into the holiday period, right? Which I should have known better. But here's the thing. I mean, you take risks. Now, I called that short trade over here, right? In this area. At one point, it was worth 100 pips. Now, in a situation like that, eventually, right, we had that ridiculous FOMC minutes come out, right, going right into the holiday, and then you got this, and then it just rallied ever since, right, and it went straight to it went to the 150 pip stop. Now, here's the learning thing with that. There was a number of opportunities to get out earlier, and a trade like this really, and of course, we're looking at this after the fact, but in these situations, if you're up like 100 pips, it's not a bad idea to move your stop to break even. It's better to break even than to get stopped out like this. Right now, I'm open to getting short again if this thing turns it into a signal. But that loss, that 150 pip loss, was completely unnecessary. There were a number of opportunities to get out. You could have gotten out for maybe a small profit, break even yesterday. And the reason why I sat on this thing, I looked at the price yesterday in the evening at the market open, and I saw that it was pulling back. I'm like, oh, okay, almost got stopped out, but now this thing is almost going back to break even. Let's see how it plays out tomorrow. And then I checked today, stopped out. This thing, what a piece of you know what. So that's the nature of a holiday market. It's complete nonsense. Perhaps obviously there's some news during the Euro session, whatever. So the point is, when you find yourself in that situation, and I had mentioned, be prepared for the conflicting signal. I had mentioned that I never called anything to get out. I gave the trade a chance because I'm still a believer in the bullish dollar. So I gave the trade a chance and it got stopped out. I think the more effective thing to do is to just break even on it, right? If you have that opportunity, move your stop to break even. Now, don't be overly sensitive. If your trade is up like 10 points or something, that's too tight. You don't move your stop, something like that. But if you're up 100 points, I think that's a little more reasonable. And if you get stopped out, you get stopped out, and it's going to happen. You're going to get stopped out. You're going to give back that money, but who cares, right? It's not a loss. That's the main thing. If you look at that type of choice over 1,000 trades, that money adds up significantly. The money that you save, that's where profits come from, not big trades. Everyone thinks, oh, I need a special tool that's going to show me how to make 150 points every time. That's complete retail nonsense that they sell to you, okay? Gimmicks. Oh, I have a special software. Oh, I have this. Oh, I have a signal thing. Oh, it's all nonsense, all of it. This is the most deceptive business in the world. please do yourself a favor. Don't buy into that garbage. So it's about keeping your losses small or staying away from a loss completely. This trade could have been like that. Okay, this could have been I stopped out for break even. I'm looking to get back in. I gave back 100 pips. Is giving back 100 pips a loss? No, that was 100 pips of profit that, I was looking for more, obviously. Now, is that a function of greed? No, that was a function of reward risk. I was risking 150. I was looking to make 200 pips. Okay, and the market never even came close to my target. I need to justify my risk. Now, if I had a smaller risk, if I had a 50-point risk or a 50 pip risk, and I was up 100 points, 100 pips, then that would be greed, because I would have been up 2-1 at that point, and I should have done something at that point. But that wasn't the case. Okay, so each trade is going to have its own reward risk, and this one, basically, I was risking 150. I was only up 100 pips. That's not good reward risk. So over time, if I just grab the money every time, I'm going to basically come out behind, because when I do take a full stop, I'm going to give back all that profit anyway. Does that make sense? It's very important to understand that. So, again, stopped out, but that could have been a break-even trade, and that would have been a much better thing now, right? Of course, we can see this after the fact. So my story with the euro is this. We get another sell signal here. This is basically just the inverse version of the dollar. This will be, I'm going to try shorting that again. I'm going to try. All right. If I get the setup and the confirmation. At this time, there's nothing there. It's too early. Okay. There's nothing to do at this time, but it's in a good location and the setup is appearing. That's all we have. All right. Does that make sense? Okay. So nothing. We have no trades here on Bitcoin. No trades. All right. And that's okay. Now, if you're going to continue to watch Bitcoin as the day continues here, perhaps something will develop, but there's just no trades, right? And it's a good thing I wasn't going long this whole time, because this thing would have been hammering me. This thing is trying to generate a long signal, but it's just not there yet. Okay, so I'm giving you something to follow there. See how that goes. I will be streaming today at 3 o'clock, on TradingView. So I know some of you like to watch me 2 times in a day. I don't know how. I can't even watch myself twice in a day. So, but I will be on there. Make sure you guys check your economic calendar. I believe we have NFP this week. I haven't checked it yet. I'm gonna look at it before my next stream. All right. No, I'm not making fun. You squint a lot. It's because the screen, Alex, is like far away, and I can't see the numbers. I can see the numbers right in front of me, but my chart screen is like over there. So I have to like look over there. The contrast isn't very good. What do you want? I'm getting old. Okay. Anyway, I feel like the interest rate hikes are delayed. Okay, which would put pressure on the dollar. I mean, it could be. I don't know. I just go by what the market shows, right? The evidence that comes from the market. These other central bankers, yeah, maybe they tend to follow the Federal Reserve. They don't lead the Federal Reserve. That I do believe. Okay. What is your trade size when you short the euro? That's a good question. I put on, for that account, I'm working with mini lots. So I usually put on 3, 2 or 3, it depends. But again, it's a function of the account size. Okay. I don't, and my risk, the more important answer there is the risk percent. I'm only risking 1% of the account. That's very important. So whether you have $10,000 or $1,000, you need to keep that risk at 1. If I state the risk in the trade idea, I put risk 1%. That's what that means. You're risking 1% of your account. Okay. If I was more confident with the trade or more aggressive, I would put 2%, but I rarely put 2%. I mean, I think the whole year I haven't put 2%. And I won't go more than 3%. That's extremely aggressive. I don't think I've ever put a 3% trade, a public trade. So those are the percentage risk levels. So again, if you have $1,000 in your account, not you, Joel, but other people, because they trade these things with like no money and they think they're going to make money. In fact, Bill put a very interesting article in the resources channel in the Discord group there about account size versus profit expectations. Very good article. If you're new, you should read that, because that really gives you a lot of perspective on what's realistic. All right. People come into this game with a $500 account and they think they're going to turn that into $25,000 because some fake moron told them that they can do that. Okay, that is so unrealistic. I can't even tell you. It's a complete fake. Okay, dream. It's a fraud. Okay, now, so if you have $1,000 in your account, is my point. If you only have $1,000, you're risking 1% of that. What is that? How much money is that? Is that $100? No, it's $10. $10. Yeah, $10. I can't even buy a sandwich with that. If you have $1,000 account and you're risking 1%, you're risking $10. That's what you should be risking. If you risk $100, you're risking 10% of your account. That is unrealistic. That is unreasonable. You will wipe out your account if you're taking 10% risks. Okay, you have to look at it from that point of view. Everything has to be percent like that, like, and 1%. So if you want to make some significant money, you need to have a big account. There's no way around that. You have these fake prop desks. They call them proprietary trade desks, where they give you access to the money. I call them fake because they're not a real proprietary trade firm. Real ones are like Jane Street Capital, where your friend FTX boy came from. But that's a real one. They won't even talk to you as a retail trader. But these fake ones, they have this thing where they charge you, a couple of $100, and then if you can complete their tests successfully, they give you access to money. That's an interesting alternative. I have to explore that more, but I see a lot of problems. I've explored some of that. I see a lot of problems, especially when they don't let you bring your own platform. You're stuck using MetaTrader platform. That's a problem, okay? Especially if you think you're going to day trade. That's a big problem. Your chances of winning are extremely low, all right? And especially if you have no experience. Oh, but we're going to get some training, and I'm going to train. It's just a great way for them to base. You're going to lose. You're going to go below their loss threshold. They're going to kick you out, and you're just going to have to spend more money. I don't want to call it a complete scam, but your chances of making that work is very low. It's hard for someone like me. I have a lot of experience. I know how to work with a MetaTrader account. I don't like MetaTrader at all. Okay, there's a lot of problems, especially with the costs and the spreads and all that stuff, right? You can't win. As a day trader, you're playing an almost impossible game. You have to be really good. And even then, it's hard. All right. So you need to be able to bring your own platform. You need a platform, an actual futures platform, a futures broker that allows you to make a market, meaning you can buy on the bid and sell on the offer, not forced to pay a spread. You cannot make money as a day trader, any significant money, if you're forced to pay a spread, especially a variable spread that's all over the place. Okay, 1 minute it's really big, 1 minute they take advantage of you all over the place. Anyway, I'm not going to talk about that. That day trade is about to go off. Look, okay, is the relation to BTC and dollar? No, well, you know what? That relationship is very erratic, Han. You can't look at that on a one-to-one basis. You cannot. 1 minute the dollar will be doing something, and then Bitcoin can kind of do its own thing. That's not a strong relationship. The stronger relationship is with the S&P. I told you that. Look at the S&P, not the dollar index. The dollar index is for bigger picture. Okay, bigger picture. This trade, I'm going to consider this trade active. 163 we're at. This trade is active. Okay, this is now a long. 160. So we'll say 160 long. Yeah. We're going to say 160 long. We said that earlier. We're going to use 160. The stop is going to go at 100, 100, right? So 60 points of risk. You need to make at least 60 points. All right, I'm going to say this. I'm going to show you the level, and I'm going to wrap this up. This can turn into a loss, by the way. Okay, so where is 60 points from here? That would be 120. Let's see if I could find that. 220 is right about here. This is 220 right there. All right. So if Bitcoin can work its way up to here over the next hour or so, right, this area right there, that right there is 1-to-1 reward risk, okay? So as a day trader, that's a reasonable place to be taking money off the table if you can get that. But more ideal would be if you can get up into this area, okay? You like 1.5, maybe 2-to-1. 2-to-1 would be great if you can get it. But 1-to-1, if this thing gives you a hard time, it's okay to take the money off. Okay, 1-to-1 isn't great, but it's better than having this thing turn into a loss. If you want to be more aggressive, just move your stop to break even and then see where the market goes. But keep in mind, this is not a bullish trend. Okay, so the chances of it breaking or getting all the way up to here is not very good. Keep that in mind. Okay. All right. So I've been talking way too. I mean, these streams are only supposed to be 30 minutes. I'm in and at an hour, and I still have another stream I have to do today. Okay. So anyway, hey everyone, thank you again for watching. If you have any questions, you know where to find me. Make sure you click on the links, go into the description portion of this video, and I will see you guys at 3 o'clock. All right. So thank you. Hey guys, thanks for watching. Otherwise, I'll see you tomorrow at this time. So enjoy the rest of your day, the rest of your evening, and thank you for watching.